Welcome back to the Till. Today's theme is pretty clear. Rates are still controlling the conversation and they're still affecting affordability. Affordability is still tight, even with the demand looking a little bit softer, and inventories are actually increasing. It's still having an effect on affordability. So here's the biggest action points for mortgage professionals right now. We should all be leading with affordability strategies. Right now, key headline is interest rates. I say it should be affordability based upon one's individual actual profile. So, agents, loan officers should be communicating, and I feel that if we figure out where those affordability lines are with a client, I like a back ratio of 43% personally. It's a little bit of a stretch, not all the way, not all the way to 50% that some of the programs allow. And so if you back off, if someone's approved for $1 million, maybe they should be looking at 800 and seeing if we can find something that meets their needs and their affordability in that range. So, realtors, I challenge you to, when you get a letter or a pre-qual letter from a lender, to call that loan officer up and say, what is my client's price with a 43 back ratio? What would they be approved for? And I challenge you to set up one feed for your real estate clients with all the criteria that they want with that price range. That would be, in my opinion, a nifty idea to see how many times you could actually get somebody to buy a home at that number or less. So, real estate agents also should be explaining why firm inventory is helps the market be stable, and first-time home buyers need that prep work. And I say start with that 43 back ratio and see what that might buy them. They might be surprised. They might actually be able to find something in their area. Also, realtors, I also challenge you to stay abreast of local news. Like if you're in Prince George's County, in Suitland, near Suitland Metro Station, there is Metro Grove, a 250 unit multifamily community. It's going to have 200 homes for affordable residents, and earning between 30 and 70% of the median household income. So, if you get somebody into one of these, say they can't buy a home right now, you get them into one of these and then they can start saving some money, they may be your next client. This may be, once this complex is up and running, this will be a great farming area for someone that is looking to save money. They move in, save money, and then you can nurture that until they can actually buy a house. So let's get into some of the other news. Redfin announced housing prices up 3% year over year, biggest increase since November. So that a little bit of a bounce back. I think last month was 2.2. Definitely in the news is some mixed news on starter homes. The government's just passed a bill pertaining to housing where manufactured homes is going to start becoming a thing. I think you're going to start seeing a little bit smaller built homes in the future. So mortgage applications slid to last year's level. So we started out strong, and with interest rates having jumped up, the biggest news of the day, of course, is mortgage rates jumping to the highest level in 2026. You can go across multiple sources and you're going to see that news, Wall Street Journal, here's the thing I want you to start watching. On your tab, watch that 10-year Treasury. 10-year Treasury has pretty much jumped from the 4.5 range and went straight to 4.70. That is a huge jump in a pattern of 5 days. 5 days, guys. Interest rates are going to take a hit based upon some of this. We got Fed meeting coming up on the 29th, which is a week away. It will be Kevin Warsh's second Fed meeting. There's a 64% chance they do nothing, right? 35% chance of an increase. That's more than a third. 33%, more than a third of a chance of a rate hike. I'm not expecting it. In general, the first rate hike is right now expected for potentially September. That would give him just a little bit of runway, about 4 months, to get some of these ideas of his and a handle on the job. And then I think that may actually happen. And there's actually a prediction of a second rate cut at 39% by the end of the year. Couple things driving this impact to this week is absolutely this map right here. This map shows why oil prices are surging. Hey, if you've got to drive to a gas station that's farther away, it costs you more money, right? If you've got to take that oil around the Cape of Good Hope and around the world, essentially, to get this oil to where it needs to go, it's going to cost more. Oil surged back over $100 a barrel. That's driving interest rates and also inflation fears themselves, right? So a couple things, something new. I challenge you, especially if you have a young child or a young kid, if you want to go to my website, with the use of AI, I'm doing a series on mortgage math, right? So mortgage math to me is always pretty cool. We'll make this a little bit bigger. If you need a little refresher course on ACE percentages and how I look at mortgage math, check it out. It's First Meridian Mortgage Math. You can find it on this tree. I challenge to see that I got 93 questions on here that I created every one of them in a succession order to help you learn some basics about mortgage math. Quite often have people say, hey, if I save a 0.5% on a $400,000 loan, how much do I save per month, or how much do I save per year? Can you do that in your head? I challenge you to go through my math questions without using a phone and without pen, paper, any resource. You should be able to do all of these things in your head. And there's a couple tips and tricks. I'm going to have a YouTube video that's going to go over that. But most importantly, be able to figure out eighths in our industry. All you really have to be able to do is figure out 1% and then figure out how to half that. If you can half that, that's a quarter. If you can half that, that's an eighth. You can do everything from being able to do those basics and understand how much savings an interest rate actually might give you. I will put a link once I get my training video on mortgage math in the comments down below. In the end, my name's Kevin Retcher. I'm the owner of First Meridian Mortgage. If you want to check out live rates, because rates are climbing, and if you're out there and another agent has said, use my loan guy, I'm happy to play second fiddle until you figure out that I should be first fiddle, with my interest rates being better than most. The other thing that you can do is if you want to schedule an appointment, you can do that right online. You can click there. And if you want to make loan application, you can start there or hit this big green button up at the top. My name's Kevin Retcher. I'm still excited with the current market, even with rates moving up, there's a lot of opportunities for people. I think there's going to be some opportunities to pick up a home a little bit cheaper. I have a personal client right now that we were able to actually get a home at 35K less than the assessed value in the neighborhood he actually wanted. That was a feat that I was super happy with on a recent deal. So, in closing, my name is Kevin Retcher, owner of First Meridian Mortgage. See you in the next video. If you have any questions, give me a call. Talk to you soon.